The KRE Regional Banks ETF getting a boost today, closing out its best week in almost 3 years, up 17% this year, but it is still underperforming the broader market. Why? And will the climb continue? Tim, you mentioned the regional banks. Financials had a good day today.
So I think the regional banks are the most interest rate sensitive, and that's been the trade that I still think is some room to unwind. Remember, we went from 3.25 10 months ago on the 10-year down to 140. So I do think that there was a lot of pain in regional bank land. I do think that despite the lower interest rate and what that's meant for mortgage rates, et cetera, and while credit, certainly credit spreads are certainly holding up and, in fact, have tightened a bit here, I think there's more to go in this trade. But I'm someone that's been long money center banks and someone that throughout this time has felt that the valuations are defendable. The balance sheets are pristine. Even the capital allocation back to investors, which I know is not why you necessarily buy a bank, but it's why a lot of people used to buy banks and why pension funds own banks. And so I like the trade. And I do think that the breakout is got some.
But if you overlay it over rates, as you were talking about before, it is just 1-to-1 there. So it depends on if you don't think rates are going much higher. And I think that we all probably agree on that. I don't know how much longer this trade can last. And I think KRE is going to be more dependent on rates moving higher, even though it's underperformed the large money center banks. I would probably think you're closer to the end of this run in both of these, the KRE and the XLF, versus to the beginning or the mid.
Dan, you say watch JP Morgan.
Listen, JP Morgan just went from 105 to 120, and it just closed, I think, at a new all-time. When's the last time we said that a major U.S. money center bank or any bank on the globe has traded at a new all-time high in the last couple years here? So that's the one you want to keep. Look at that thing right there. Got rejected on numerous occasions over the last 18 months at that level. To me, I think if we could establish a new range, given the fact that we're going to have rates where they are, they're not going too much higher here, then that could be bullish. I know Guy had a power pitch a couple weeks ago on Citi when it was trading at 60. It went to 70. Its high from 2018 was 80. Maybe JP can grab, drag some of those guys out.
I think the JP Morgan chart looks a little bit better than the regionals chart, for example. So the regionals still kind of making lower highs where JP Morgan looks poised to break out. So there may be this little bit of a dichotomy between the larger money center banks and some of the regionals. So it's something to keep an eye on. I think KRE is at a really interesting point right now. Can it break out through that downtrend? We'll see.
Yeah, I just want to be clear, back to being consistent. I don't really like him here, so I don't think you buy him because I actually think rates are going back lower.
We needed that, but
okay, fine.